All right, guys, what's up? It's Mike. I just thought I was going to do this video for you guys this week. I did not get to do my webinar. I have pretty bad allergies this week. You might still hear it. This is the worst time for me. End of April, May. It's just always brutal. I've taken shots for it. It doesn't even matter. Again, I didn't get to discuss any of this live in a webinar format, but everything I'm going to discuss here was done in real time on the forums or the blogs. So, again, for those of you who can't keep up with that stuff, I understand that can be frustrating and you have to go back and review it, or I do a video or I speak about it in a webinar. Again, the goal for me is to do this in multiple formats that, again, helps you guys progress as traders. Obviously, that's the end goal, right, is to get you guys doing this for yourselves. And also is practical for me. At this point, I've been doing my trades live on the forums or the blogs. And again, we started with the text messages. And, again, I've spoken about why we stopped that. And I'll touch on that again here. Technology-wise, we were having a lot of issues. People were not receiving these text messages, in terms of just being able to get that information out quick enough. It would have to go through a queue. It was going out to 1,000 people, so it has to load through, and it does 100 at a time. It checks for new ones every minute, so these things have to be done quick. So being able to do it on the forums or the blogs, and mostly the forum for me, is the fastest way that I can get it out accurately, in real time, no discrepancy, which is a big deal for me. And again, we really didn't see much from it. So some of you are disappointed that we stopped it. Again, we did it on a donation basis, but it taught me a lot. One of the things it taught me is there's not a perfect solution for that. One of the bigger issues that I was noticing, again, even in the beginning, which, overall the ones I sent out was, profitable, not by a ton, but they were all profitable in the long run. But, if somebody took only 2 of them and those ended up being negative, they're looking at it, it's a losing situation, so there's no reason for me to donate. And again, I understood that, right? It doesn't make sense. You lost money, but that's the catch here. That's the whole problem with this idea of sending out signals per se. And I'm going to speak about why I'm touching on this first. And it's because if you don't take everything that a trader does, right? You look at me. If you don't take every single one of my trades, you're not going to be able to replicate what I'm doing. So, that was sort of always the frustrating part about going into that situation. It was like, we want to add a new cool thing that nobody else is doing. Hopefully, again, do well, and then in turn, you guys will send back to us what you think we've earned on your part. And again, it was such an imperfect solution. And the stress and the pressure of that, and then not being able to explain what I'm doing. It's too much. It doesn't make sense. It was basically just letting you guys blindly follow if you choose. There's zero control from our end, and again, with the technology side of it not being good, it doesn't make sense. Especially for doing it for free. So what I do as a instructor, I think, is pretty unique. This year I've only basically spoke about trades that I'm taking in real time, meaning I will post my entry in real time, the updates in real time, the finish in real time. Other than that, if I take trades outside of that, I tend to actually not even speak about them. I don't know why. Maybe it's just because I've been doing this so long at this point that I get frustrated with the fact that people will doubt something, or I don't know. I think maybe just it keeps it interesting for me too. So again, everything I'm going to speak about here was from this week, was done in real time. So you can go back to the forums, you can verify it. And again, I just wanted to help you guys. I'm hoping, maybe this will morph into something, again, it's still a lot of pressure to do it this way. Getting up in the middle of the night and not only executing the trades on my end, but posting screenshots at 3 a.m., 4 a.m. is not really something that I see as sustainable in the long run. I might move to a format where, I do some more, I save that for personal one-on-one time as a premium service. So that's sort of in my head of, how can I continue to do this? And again, I'm always interested in your feedback, guys. There's such a medium ground here, right? We offer this great site. and we want to continue to do that. And I want to continue to offer such a wide range of ways to teach you guys from whatever level you're at, and really just, in my eyes, I want to stand out to you guys and make it worth it, So again, going forward, I'm just sort of thinking about different ideas here. But let's get into the actual trades of this week. There's a reason I'm doing a video wrap up this week. The markets have finally sort of clicked, in my opinion. January was sort of a slow-ish month, but there were some trades. And then we had February, March, and most of April. It was tough, right? It was slim pickings, in my opinion. It was a lot of back and forth. There was no catalyst movements in the market. It was, make a little, lose a little, make a little, lose a little. And throughout that whole entire period of time, I spoke about relentlessly. And I'm hoping that now, after this week, you guys are understanding what I'm speaking about, because I've proven it. I'm showing it to you. How important it is understanding that what your job is as a trader is, yes, defining logical entries, being picky, being logical about your trade management, but it's protecting your capital and your risk and understanding what you're doing when you're taking risk as a trader, right? It's not just, oh, let me risk 3% of my account and hopefully I make X percent, right? It's understanding, well, if I lose, what's going to happen? If I win, what's going to happen? And how does that, what occurs over a larger period of time? So again, something I always speak to you guys about is that, my goal is to have a smooth equity curve. So, this year has basically been one of these, right? Slight up and then just sort of swiveling, swiveling. And all I'm waiting for in this period of time, and again, I've never gone negative. I've never gone under zero. Again, except for my first trade, just, sort of the floating P&L, but I've never gone below zero, and I've never had drastic ups and downs. Until just recently, where I've just started to break and make new highs, and we're going to speak about that. But this is what it's about for me, right? And this is what I speak about when I'm drilling in week in and week out about dynamic risk reward. And some of you are probably bored of it, and some of you aren't choosing to listen to it because you just want to make your X percent of quit your job or whatever it is. And I'm just trying to give you guys a framework that works. And, from my end, I'm very passionate about that part of it. That's why I've done what I've done so far this year. And I've done it for many years, but because a lot of you are new, and our site was a lot smaller and it was just a form, you haven't really got to have access to that, or maybe even knew I was doing it. I'm trying to show you guys so you can do it, And again, it stems from this idea of understanding your risk here. So again, with that said, this week we had a lot of interesting moves. I've been speaking about the equity markets. I just think are going to get hammered, and finally this week we saw some of that turning over. We had the BOJ throw some surprise movements in, or whatever decisions in that created some larger moves. This is what we want as traders. We want those things. We do not want markets stuck in this bad volatility. The way the markets have been this year has been not volatile. They've been stuck in these tight ranges. That's not volatility. So if you're stuck in a tight range, but yet you might have within that range price chops around and then once in a while you get a strong move, that's not volatility. That's not good volatility for a trader. Good volatility for a trader is when you're getting more flowing movements outside of ranges, or just in general more flow to your movements, right? Because if things chop around too much, you end up getting stopped out. And that's sort of been the catch of this year, right around in this area here. In general, that's what's sort of been the issue, and why my equity curve, although was up a little bit, has overall stayed flat for a larger period of time, is because of that sideways action, right? Because again, I'm being smart about protecting my capital, right? I'm using dynamic risk reward, which is, cut my losses, let my winners run, and sort of juggling those until you hit that win streak. Well, this week was that win streak for me, which again, sometimes you have 3-4 months of that in a row, and then this is what happens sometimes. You have 2-3 months where you're in a lull. In terms of what I do, this is the reality of it. And I understand that, so I'm able to trade through it. So again, I'm hoping these first 4 months here has been, in my opinion, could not have been, although frustrating, could not be a better way for people to actually learn what it's like to be a trader and become profitable. And hopefully I've done that for you guys. And again, like I said, I don't know the evolution of where I'm going to go with this. Maybe I'll just continue to do what I'm doing. Maybe I'm going to turn this into sort of a premium. That way I can just get some order back to my life here where it's a little bit easier on me personally. But again, at the end of the day, this is what we speak about, or what I speak about week in, week out, day in, day out, analysis after analysis after analysis. So what I'm going to do here is just break down. These are all trades that have closed this week, or were executed this week, or even, again, I have even a trade open now we're going to go through here. And I just want you guys to see that process through these trades. And at the end of the day, this ends up being about a 5% week for me. Again, this is on the forums, on the blogs, so you guys can go back, and if it's helpful, and that's why I do it too, you can go back and see, okay, here was Mike's thought process, here was his update, here was the final, and maybe compare it to what you might do, or, hopefully get you some information. So the first one I'm going to go over here is Teradyne. And again, equities have been dead to me. This is the first equity trade I've taken all year. That's crazy to me. That's a long period of time. But at the same time, you have to think about things as in the long run, right? You can't be results oriented short term. You have to think of this as, if when I look back at the end of the year, you're not going to remember one trade or another trade really. And meaning you're going to think of your trades as one large unit, right? But when things are slow, you start to get really fixated on the day in, day out. And even I do. Even this period of time for me was tough in terms of I've never started a year this slow. But what we're going to work towards here now is basically I'm at where I'd like to be sort of as my minimum averages per month. And it only took one good week to do that. And it just took protecting my capital as I made a little bit, gave a little back, made a little bit, gave a little back, but never put myself in a big drawdown situation. So again, let's go through the trades now. I know that was a large rant, and I'm ranting right now because I did not get to do my webinar. This is some of the stuff I was going to start to touch on, and wanted to make sure I sort of reach out to you guys here. So Teradyne ended up being a great trade. Again, I posted this one originally on the blog. Some of the ones that are longer time frames, it's easier to do on the blog because it's a little bit more clicking and uploading or whatnot. And again, it's a really simple situation here. So I'm going to work through each of these situations and my thought process through these situations, and just so you guys can see, there's winners, there's losers, there's break-evens, there's all kinds of stuff here. So hopefully this is a powerful video for you guys. So again, when I came to this chart a few weeks back here, again, I only like to trade equities on the weekly time frame, once in a blue moon, maybe a daily chart. Again, we have just this massive divergence. I mean, divergence just does not get stronger than what we're seeing here, right? And what I mean by divergence, again, I don't have a MACD up, I don't keep that up, but I'm looking at what price is doing, right? Price will tell you what it's doing here. So look at how each time price makes a new high, what does it do? Falls off. New high, falls off. New high, falls off. New high, falls off, right? So why am I not going to be looking at this and say, I want to be a seller here? But how can I be a seller, right? So again, we got a great situation here. We got a bearish outside bar or double high, lower close right off of this area here. So for me, simply, again, all I'm looking for here is to sell this situation. Now, because we're in a sideways market, right? So we're trading back into a very sideways range. So we don't know what kind of move is going to happen. There happened to be just a fantastic move, but we don't know. So for me, looking at this bearish outside bar going into the open Monday, my thought process is, okay, if we gap down real far or something, I'm just going to ignore this trade. But if we open or gap up anywhere, I'm just going to try to execute pretty much as quick as possible because we're likely to chop around in this area. Now, immediately my thought process is always shifting to risk. What should I risk, and how is that going to impact me in my trade plan? So in a situation like this, we have to expect, well, we're back within this range here, right? So it's very possible this thing could have pulled all the way back up to here even. So am I going to go here and enter in on the open, and we're going to speak about my entry, stick my stop loss above here, and risk, again, I always speak about for a full bar risk for me, I risk 3% personally. Am I going to risk 3% here and watch this thing draw down to 2 1/4, 2 3/4, and then just hope it turns around? No, I'm going to risk something that's appropriate, understanding that I don't have a lot of room for trade management here. Right? So my risk in a case like this where I know I'm not going to have a lot of room for trade management is I just basically cut my risk in half. So instead of risking 3%, I risk 1.5%. Because then that way, if this thing just comes all the way up, takes me out, and I never got a chance to move my stop, go to break even, whatever, I'm going to lose 1.5%. And the only reason I know these percentages is not because I pulled them out of thin air, is because I've worked on them for a very long time. I've built up to these. You know, I didn't always risk 3%. You know, I risked 1.5% as my full bar for a while, and 2%. You know, so I understand my dynamics of the way I trade, and that's very important for you guys going forward. Is, you know, again, it's not about being a copycat of me or anybody else. It's about understanding what you're doing, right? So think about that. So again, I risked half percentage in here. We actually happened to gap up here just above the $21 mark, which was ideal for me. An ideal situation here is a gap up situation, right? Because I know I'm getting short, so I just want to sort of get the best price possible. Again, we gapped up here, and I got in just above 21. And my initial goal here was just to get us to the $20 mark, right? Look, this where space runs out here. You know, again, we're sideways. You know, if we can just get into this pivot here, you know, I'd be happy. And, you know, we just did a whole lot of nothing. Price came down. We kept bouncing off of this 2050 area. Price would come up, come down, come up, come down. Just not a whole lot. So I did not move my stop at any point. And then what we had this week was we had earnings. So earnings came out again, you know, a lot of people say, oh, second I hear earnings are coming out, I'm closing up shop. I don't want to be in that volatility. I trust the price action. Now, again, you know, earnings can come out and it can hurt you. It's just like holding a position over the weekend in Forex. Price can gap and it can hurt you. But this is also why I control my risk. And this is why I trade off of weekly charts too, right? If you're trading off of a daily chart or an hourly chart and an equity and holding it overnight and your position size is, you know, 20 cents, you know, and this thing gaps huge, you're in a world of hurt. You're going to be in a world of hurt. So earnings came out. This thing gapped down tremendously here. I'm just going to drop to the daily chart so you can see it. So again, you know, I'm in here up at 2102, and this thing gaps down and just runs to right around 1950, which is where I got out, and it kept going. It kept going. You know, again, once the market opened, I let it settle for a little bit, and then I just wanted to get a fill out because, again, even though it's a tremendous gap down, I want to understand the market we're in here, and there's a high probability that we do chop around. You know, yes, could we get down here? Sure. But we could have, you know, gapped down to, you know, 1950 was a little bit higher than that, but we could have gone down underneath, you know, 1950, whatever, easily pulled all the way back here and then came down too. So am I going to give up all that profit, right? Definitely not. Not in this situation here. So ended up closing it out here. It was for about a 2.2% gain. And just a really nice move. Yeah, you took a little patience, but never once did I not understand the situation and what I was doing. Right? So, again, just a great trade there. You know, it was good to be on the right side of earnings and all that other stuff. And we had BOJ that came out and, you know, all this craziness. But again, price action to me is the ultimate predictor because it's showing you where the flow of money is, right? So just because news comes out does not mean that that money is not already, you know, impacted into these markets, and there's all these other kinds of things going on. So I didn't really care that earnings was coming out. I just care about the price action setup. So, okay, that's Teradyne here. The next one I want to start with here is Pound New Zealand. So there's two things here to go over. There's my current trade and a previous trade here. So again, I had posted about the Pound New Zealand on the blog about saying, okay, listen, we've had this tremendous move down after price gapped over here, right? Tremendous move down. And you know, again, if you're just trying to pick a random bottom here, you're going to get into trouble. But we had this beautiful bullish outside bar, right? Huge bullish outside bar comes underneath this resistance area, right? So you start to think about, okay, maybe price is going to keep going down, and then we have this huge snapback creating that bullish outside bar, which closed over here is the 2.1 big round number, and it closed over this pivot zone. So again, this pivot zone is hugely important, right? Let's look at it. Resistance, 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 resistance. Price breaks up and through. What does it do? It holds a support. Next time back to it, what does it do? Holds a support, 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 support. Here we break on down again, and then what happens? Turns into resistance. So this is key here. This is what I call localization, right? So we know we have a large price pivot zone, and over here we're able to localize that price pivot zone to here, because here's that support and resistance flip based on this area, right? Based on this 2.1 larger price pivot zone, which might be a zone that looks like that, right? So we got that bullish outside bar to close back above this area, back above our trend line. Quite simply, I'm just looking to play, get in on this. Maybe price retraces to here. Again, the bullish outside bar closed right up over here. So my plan going into the week was just get yourself an entry, Mike. Don't have to nitpick. Don't be so perfect here. There's no, it's not like the pullback's all the way down here. I'm just looking to get an entry. And I was looking to work it up towards the next big round number of 2.15, which was just under the gap close. And you can see the support and resistance flip, right? Look at all this support. Price breaks down, turns into resistance. So that's a logical area for this trade to want to run, right? Well, again, listen, we're traders. It's one of the things I say all the time, right? It's not if price is going to get somewhere, right? It's not like, okay, you know what direction. It's always how price gets there, which is going to affect, again, that dynamic risk reward side, the trade management side, that side that everybody says that they struggle with most. Well, price actually ended up gapping up. So let's just sort of get in here on the daily, just so you guys can see that. Again, these trend lines always shift. MetaTrader, annoyingly enough here. So again, price had gapped up over that 2.1. So let me put the 2.1 on there just to make this a little bit easier to follow. So we actually gapped up Sunday. We had a large gap up here. It was something like 130 pips, 140 pips, something like that. So I'm not going to buy in that gap up, right? Because what's the likelihood of price to do? It's probably going to want to fill that gap and then possibly move higher. So once again, it gave me the perfect ideal entry. I entered basically at the big round number. Once price filled that gap, it basically held to the pip pretty much and started to work higher here. And everything looked fine. Everything looked like, okay, we're well on our way. As we started to spike up into 2.13 here, I simply moved my stop from under here to break even. And again, this is a full bar, so it's a 3% risk, because I know, okay, if price starts to pull back, let's go back to the weekly, right? We enter here, price starts to pull back down into here, okay, I can look to start to cut out somewhere underneath here, this pivot. Maybe I lose 1 and 1.4, 1.3, 1.5. I can control my risk. That's why I start with my stop down here. I can get a proper position size and I can control my risk. It's how I view risk reward. It's not like everybody else. I don't believe risk reward is a fixed thing. It's a dynamic, fluid thing to me. Well, price got up real high here. Looked like we were going to make it there, and I went to break even as we approached 2.13. And what happened? We had huge news come out from New Zealand, and the thing just crashed. It literally just fell like a rock and ended up stopping me out for break even. So that's that trade there. So again, you can see a current one running. So let me just pull up another pound New Zealand chart just to make it a little bit easier to follow here. Okay, so here's another pound New Zealand chart. Let's just throw back in our lines here. Here's our descending trend line. So now, why did I re-enter here? And again, it's the same situation. I'm re-entering based on the weekly bullish outside bar. Well, I'm re-entering because we never really tested this price pivot zone, this minor localization price pivot zone, right? Remember, we entered on a pullback to the gap here. Price took right off. So it's not crazy to me to think price is going to want to pull back into this pivot and then move higher. Again, we have this open gap still. I think that's where price wants to drive towards. I've been saying that for weeks, right? We just want the right situation. So basically all I did in this situation was I picked this level down in here, right, to enter in, right? And somebody asked me, Mike, how do you pick that retrace level? Well, I just eyeball it. It looks like it's right around in here, slightly under 2.09. And what we actually had was price spiked down, right? Got taken out for break even over here. Price kept coming down and started to move higher. Just missed my entry. And I just adjusted it slightly underneath this last swing low, right? Because to me, that was a great place to shake out the buyers, shake out any weak buyers and get back in. It's right at that pivot here. And now we're back in. So I'm back in this same trade. Again, it's really, I'm looking at the same things I just explained here. Still that full 3% risk for me, and that same idea of looking to cut out. Now, a lot of people might say, well, Mike, look at you got a pin bar now. This thing's dropping like a rock. But again, think about your location. Look at where this bar closed. It's still above this pivot zone here, right? So for me, it's more logical to see this thing maybe pull down a little bit and move higher rather than take us all the way down. But either way, again, I'm going to watch this area and look to cut out if this area can't hold. But I'm looking for price to possibly move down a little bit into the zone and then push higher back through towards this gap. Okay, so that's my open trade still. So again, break even on the first New Zealand. It was up, nice profit. But it just did not let me adjust any other way. To me, it was not a situation where I was going to lock in profit. I wanted to let the trade work to the logical area. Again, break even, protecting capital, doing what I have to do. So the next thing I want to speak about here is the Euro Australian, which, oh man, look at this thing run this week. And believe me, I did not catch all of that. Would have been real nice here, but this one was sort of a battle. This one took a lot of patience, a lot of just trusting your trade, and I sort of balked a little bit and whatnot here. So let me explain. There's two trades in here that I took. Both ended up being profitable. So let's explain that, and you can see them here. So again, we had this support area, and I will admit this trade, guys, I didn't even spot this. We have such smart members here, and I know a lot of you guys follow my material, and you guys post something, I keep an eye out for it. You guys draw attention to a chart I might not be watching, and that's the beauty of these forums too, and these the James16 group is, yeah, I'm an instructor, but there are plenty of you who are fantastic traders that you put something up, I'm going to evaluate it and see what it is. So we had Alejandro who actually posted up asking me about this potential false breakout here. So what we had is support, support, support. Price breaks down, right? Here's a small bearish outside bar closing under this 1.45 big round number here. But again, what I want to trade this short into these huge buying points here. So for me, no. Again, did it move a little bit? Could you have squeaked out some profit? Yes. Could you have squeaked out a break even? Yes. Not worth it for me. But the key here, and what Alejandro had pointed out, was, okay, we broke out. Well, if we break back up here, isn't that a great sign of a false breakout, or what I call a fake breakout, right? A fakey breakout. So if you just think about it as, okay, you have support, support, price breaks down, then closes back up, what's likely to happen? That's likely to turn right back into support, right? So these are great trades. I love fake breakouts, and these markets are sort of built for fake breakouts, right? Because we have this indecision everywhere. So breakouts don't sustain. This is not really a breakout situation. So this is an ideal situation for a false breakout. So what I played it as was same as Alejandro. I played it as an 8-hour bullish outside bar, which again, if we use, here's the last support point, right? Here's our big round number. Price breaks down. Then look what happens. It breaks back in, closes back above this, the rising trend line and the support area. So what I played it as is, if we combine this bar and this bar together, we get an 8-hour bullish outside bar that engulfs this entire range here. And most importantly, it closed back above this area, right? Look at this support area. This is that localization confirming that rising trend line here. So now we're back above this area here. So again, just getting in here, stop below the low. Again, this is a full bar risk. I know I get to manage my risk within this area, right? Maybe it wants to pull back to these bar highs, right? Here's the pivot zone, right? Support turns to resistance, big round number, right? What did price do? Pull back to this area, pushed higher. What did I do? I reduced my risk under this area, which reduces a large majority, over half. And then again, my target was, initially I was thinking of targeting these highs. But then what happened is we developed into pushing this daily bullish bar, and we had that previous bearish outside bar. In my opinion, this market was going to want to test at least above that bearish outside bar, right? Wipe those stops out, shake out any of those sellers in there, and more likely into this pivot zone, right? Look at all the support here. So this is where that market was sort of driving towards for me. So again, that's where I was targeting, right sort of into this area here, a little bit higher. I'd adjusted my take profit, and we just, literally dead, down, dead, down, up, down, up, down. It was like painful watching this one, because just was not doing anything here. So what I ended up doing, again, this is that first entries here, is as we pushed into this area here, we made sort of one last push up here into these bar highs. I decided to just get my stop underneath this area as we made that last push here, because we started to show sort of this weakness too into this area, although again we had this much stronger buy area here. So I said, all right, let me lock in some profit here. So I locked in basically 1%. It was just slightly under 1%. Ended up getting shaken out, and we had this large shakeout move that occurred. So I want to go back to it because this is the basis of my second entry. So let's go back to it here. Okay, so here is that large down move we had. We had this big shakeout move, right? So again, here was that climb higher. It's when I moved my stop up here. I said, okay, let's lock in profit underneath this last swing low. And we had this huge down move. And people get really scared of these big moves. But oftentimes these big moves lead to a move in the opposite way if it's the correct location, because it provides the liquidity to get buyers, in this case, back in. So how did I determine to get back in? Well, for me, it was pretty simple. What I looked for here was for price. In this case here, we closed back above this massive block of consolidation, right? And we were still, we're maintaining ourselves above this support area. So to me, it just seemed like a pure shakeout move. Let me get back to it here. A pure shakeout move that, I just happened to get trapped in. And if I would have left my stop at break even or anything else, I would have been able to stay and maintain that trade. So what I did when I entered here was, let me just sort of mark this off here. So here was that support area. Here's that huge down move. Then we had one of these pin bars with a breakaway bar, right? So I've explained this to you guys. Pin bar with a breakaway bar. Often price likes to retrace to the high of this area, which happened to line up with the low here, and price would go higher. Well, I sort of, again, this is the things as a trader. I sort of waited a little bit. I just wanted to see if this was going to hold. It started to, so I bought in here. I actually got a slightly better price, but I bought in here. And in this case here, all I did was I stuck my stop under this last low here. For me, it was either this was going to hold, or if it didn't, then we would shoot downwards. And I just cut my risk to a touch trade and used 0.5%, just to give myself a little bit, okay, worst case, I get stopped out for that. I don't get back all my profit and still end up with, a 0.5% gain from the first one here. And all I did was aim for the same situation here. So if I'm looking at the 4 hour, here's my second entry, stop loss, which is basically where I got stopped out for break even, for the 1% gain. And again, I was still just targeted the same area, right? I targeted that previous support area in here. And obviously, we see what happened. We had just a monster move. I mean, this thing just shot straight up here and just really basically never turned back. Again, it would be great to say, I held it through that. But again, everything has to be sort of logical. And, this was not a case for me that I was going to look for a runner, in a market that looks like this. It's just not going to happen. But again, either way, I ended up with a 1.3536% gain. Again, I sort of tend to round down the numbers or round up. If it's 1.39, I'll say it's 1.4, and if it's 1.3435, I'll say it's 1.3. Again, I'm just trying to give you guys an idea. So again, two nice trades here, but again, what was I doing all the whole time? Thinking about my risk, protecting my risk. What can I do with my risk? Okay, so let's go on to the next one. Again, this is a long video. This is literally going to be the missed webinar from this week. So hopefully that makes up for you guys. That we're looking forward to that here. So the next trade that I took, well, again, these aren't all in chronological order, I should say. But again, I'm just sort of going through, underneath my screen, I have a list here. Was a trade on, again, would be a futures market on the mini S&P. And again, you go back to my last few webinars. I am not buying into these bullish markets that we're having in the equities markets. They're, in my opinion, extremely overbought. I have strong opinions about being in them, as an investment long term right now. I think it's just so dangerous. I think the risk to the upside is, the reward to the upside is so limited and the risk to the downside is so high. You know, it's sort of like the 2008 all over again. You know, you're maybe make a little, or you're going to be in for a world of hurt, and people are going to be losing 20, 30, 40, 50% of their retirement accounts. Again, that is not financial advice. That is not telling you what to do. I'm always speaking from my end. I always make that very clear, but it's very important that you guys understand these are just my opinions, and they can be meaningless. You know, this is just how I start to do my trading. So again, it was another situation where I was looking for a fake breakout. So I was watching this resistance area. Look at this beautiful trend line, right? Here we had this bullish outside bar. Again, I was not willing to play this bullish outside bar. I just could not get myself to buy into this area, right? I mean, it's just brewing for me. This is just brewing as issues, even from a technical standpoint, let alone just my sort of beliefs. So again, we worked higher, and then look what happened. We got a bearish outside bar that closed back under here. Now, again, here was a case where I overthought things a little bit. I had reasons for doing what I did, but I overthought things maybe a little bit here. Instead of entering here on the close, I was just a little reluctant with, was this the last point that this market was sitting on here, right? So here's our resistance, and price is sort of sitting on there. Was price under this trend line, but I just felt like this was this market turning over here. So instead of buying here on a pullback, which would have been the smarter play and limited my risk a little bit more, not too much more though, but it would have limited my risk a slight bit higher. I decided to buy a break of this bearish outside bar to really confirm, okay, you're underneath that swing point. You are underneath this area. This should be where the market gives out. Well, what happened? Price came down, nicked me in. Next day we pulled back, and we closed still underneath that trend line. So again, I just left my stop up here. I said I'm not ready to move it yet. I want to see price start to turn down before I move my stop. Well, again, we gapped up Sunday right above here, and we filled that gap. And I actually was glad that we gapped up. Let me just show you guys. I was glad that we gapped up into here because it really let me say, okay, this gap should fill, which should get us back underneath that trend line. Then let me pull my stop loss down underneath that swing point, because if that can't hold up in here, then we might be moving higher. Well, you know, this is what happened. Price came down. We even moved down lower again underneath my entry. I was loving this. I thought, okay, this is, you know, I am timing this right, even though the markets are choppy. I think I got this. We closed underneath the trend line again. Looked like we might even fill through that wick. I just left my stop up there. Even the next day, we sort of, you know, chopped around, still closed underneath that trend line. Then we just bumped up here. Just bumped up here, took me out, and then look what happened. Massive sell-off, right? Exactly what I was looking for. So, listen, this is exactly what I said before, right? It's not about where the market goes, it's how it gets there. Right? So I can be right. I can tell you guys, I know this market's turning over. This market's in for a world of hurt, you know, but it doesn't matter. I still have to manage that as a trader, and I can't leave myself open to taking a 3% loss here on this situation just because price starts creeping up above a logical area, and I just want to hope and wish and pray that it turns over. I'm not going to do that, right? Because that's what's going to keep my equity curve from going up and down a little bit. It's not going to give me these large drawdowns. Right? It's not going to happen. I'm not going to let that happen. I'm going to wait for things to be logical. So, again, this ended up being a loss. This was a loss about 1.5859%. You know, again, then that next day dropped like a rock. And I just left it. I just, you know, wasn't willing to, you know, again, get stopped out all the way up here for a full bar loss. I just could not do that to myself. Speaking about this situation here, though, we will speak about now today. Again, you know, this is just sort of the breaks here. I got pretty unlucky here. Let me just show you. Let me just pull up here one sec. Okay, guys, so here is my trade that was canceled. This is not an activated trade. Yesterday we had, again, that was when price fell off here. We had this sort of almost bearish outside bar. I called it a 2-day bearish outside bar, combining these two bars, closing underneath this beautiful resistance. Again, here's our short-term resistance, turns into support. I had my entry just above the 17. Let me just go in here so you guys can see that. So again, here's the 17.8 mark. I have my entry just a slight bit higher here. This market pulls back, just misses my entry, and look what happens. We drop like a rock, right? So again, this is a trade that never activated, was beauty. I had it pegged down. Again, do I enter right here on the close and then say to myself, okay, well, I'll just let it creep up more? No, I don't believe that's the logical thing to do. I want to get the entry I want to get for specific reasons, right? It cuts down on my drawdown in the long run here. So it did not work out. Again, I just wanted to show you guys a trade that just never executed. I think this has huge potentials still for next week. I think we might see something like this and then a massive sell-off. Maybe not, again, but I'm going to be looking to get back in over here. Pretty much the same thing here that my entry was here too. So, okay, so that's S&P and the mini Dow, which are two separate, again, futures, but they move basically in tandem. Okay, so the next trade here I want to go over here is the USD HUF, which is Hungary's currency. Hungary, right? And this is a really interesting play for me. So again, I had made a play on this pair on the daily chart, you know, back in, when was this, early March? Yeah, mid-March almost, on this big old bearish outside bar here, right? Big old bearish outside bar. I simply played a retrace back to the pivot zone. Again, resistance turns to support. Price holds there, right? And what I was targeting was this support area, down all the way down here, right? So price got to here, which was a logical point. It was, again, a nice profit. But I was trying to stick to my guns, knowing that we're going to retest this area, which was, again, this weekly area, which is just so strong. You know, that market was driving down that way. So I ended up getting stopped out, break even on that one too. The only reason I'm bringing that up is my basis for this next trade here was sort of the same idea that I think the market wants to drive towards this trend line again. And what I had spotted here was this divergence play, this double top divergence play, which I'm going to show you here. So here's, again, this was an hourly time frame trade that sort of progressed into a 4-hour daily. It was an hour, 4-hour overlap daily that progressed into a daily trade here. So let me show you guys. Again, I was looking at this double top, this resistance top here, swing point. Price pulls up into this area here, and again, this is a choppy pair, right? And the spreads are tricky. So this is one that is not sort of for the faint of heart, but I've traded this pair and many exotic pairs enough to understand them. And then as we trade into this previous strong resistance point, look what happens, right? Price makes a high, retreats. New high, retreats. New high, retreats. So again, there's that divergence, just like Teradyne, right? Every time we make a new high, price falls off. There's your divergence, folks. You don't need anything else to show you that. Let the market show you that. Well, we got this beautiful situation here where we had this pin bar at the last swing point here, right? Price trying to make new highs, and then price collapses. Once again, there's that pin bar breakaway situation, right? So, you know, again, I bring up the same types of things. You know, this is how I trade. I trade on the same, you know, sort of ideas. They're just tools here. So what we ended up getting here was that pin bar breakaway. Again, price loves to retest into these areas here before making the next move down, especially on an exotic pair like this, where liquidity is very low. So in my opinion, there's a even higher probability this thing wants to run up here before running down. So if we go to the 4-hour here, you can see the same thing, right? You can see a similar situation where here's our bearish outside bar, right? Engulfing, closing underneath this range here. So all I did was play a retrace of that 4-hour bearish outside bar towards the top here, but it was based on a pullback to this pin bar low, right? And again, my target here initially was underneath this swing low, and I'll show you why. Again, on the daily chart, I was just targeting into these swing points here, right? So we're in a choppy market. I understood that. But I was just targeting to these swing points, and I believed price was going to drive down towards this rising trend line, which look what it did. It did. So it's like, how come, Mike, how come you didn't catch that whole thing? Well, again, go back to it. It's not where price goes, it's how price gets there. And this was a very difficult trade to be able to stay into here, and I'm going to explain why. So again, this trade moved up, right? We came down, we moved up, we came down. And then as we came down the second time, we were heading into FOMC, right? And again, what's going to happen during an FOMC statement? Especially in these types of markets, you're going to get really widespread pairs, right? So my initial stop loss is up here, right? And then as price starts to get down to here, this second time, right, I look to go to break even. Well, I have to say to myself, what's more likely to happen? Am I more likely to be in this trade around here, and price make it down to my take profit, which was right here, or is the spread more likely to kick and take me out? Well, the spread's more likely to take me out, right? Because again, I sold on the bid. I'm going to get taken out at the ask price, and this spread can get huge. It can get huge. So is it worth me risking first, not only get stopped out at break even, or first of all, maybe just leaving my stop up here and taking a loss, which again, I should have mentioned, this was a half bar risk, right? So I did not risk 3%. I risked 1.5 in this situation. Is it worth leaving that risk on the table in that situation? Even if I kind of have a good idea where price is going, knowing that just the spread can take me out, right? This thing could just burp up and the spread could take me out. It's not worth it to me in that situation here. So I ended up closing it out before the FOMC announcement, but really before we even got to that point, right? Because the spread started to widen before. So I ended up with a 1.55% gain on this one here, and the spread would have taken me out at break even. So again, we did drive down. No surprises to me. Again, I'm not giving you guys the hindsight of, okay, yeah, I caught this whole move, because that's what my initial analysis was, right? I'm giving you the real world. This is how price and risk and money, this is how it affects the mental side of trading. And that management side that so many of you say you struggle with here. So, okay, let's keep going here, guys. Okay, so I believe the last pair here is the pound Canadian. So again, it was a really active week, really active week here. So the pound Canadian I had a loss and a win. The loss came first, and again, it was another interesting situation where again we broke out of this trend line. We started to, and again we have open gaps on this pair, so I think price is now going to drive towards this area. This is the major area price should revisit in the long term. I'm going to look to sort of work price that way eventually too. But what we had on the 4 hour, let me just sort of adjust this, was price broke out. Again, there was no entries in here for me. Nothing made sense. And then price started to look like it wanted to create a false breakout. So I actually had a pending order over here where price looked like it was just sort of on the border line of closing underneath this area or not. So if you combine these bars with these bars, you would have basically got a 16-hour pin bar. And again, I know where to enter, right? Am I going to enter here on the close where we could be above this area? No. So I had a sell stop underneath this area down here. Price started to move higher, never triggered it, and I actually pulled that order. And then what happened? Price would have poked down, would have poked higher, and would have been really hard trade to be in, right? So again, I'm thinking about risk. I'm thinking about how to manage it. Well, next, a few bars later, we actually got a 4-hour bearish outside bar. And I got to explain also why I took this false breakout. So we had a 4-hour bearish outside bar closing underneath that area. This is where I actually entered on the close. Now, the reason I'm entering this is not just a false breakout of this trend line, is we still have this open gap here, right? So my whole thought process, even with the pound New Zealand, these pound pairs, is price going to want to close this gap before then pushing higher, right? So my target was target that gap in here. Price got real close, right? Price got real close. Initial stop, again, above the bar here is a full bar risk. And as we started to break down here, what I had done is reduce my risk above this high here. And you'll see I got stopped out here. And there's a reason. As we sort of worked back up higher here, we were going into the rollover period around 5 p.m. New York time. And the spreads widened, especially on the pound Canadian. It's not such a major pair. Spread's going to get up there 15, 20 pips. So I would have got shaken out without price actually moving above this area, right? So I actually had reduced my risk to about 0.81% from what I remember, and I actually increased it. So I increased it by another 0.3% to try to work through that rollover period, and I ended up getting stopped out on that one for 1.12% risk in that situation. So again, sometimes you have to modify things slightly based on conditions, like I did with the Hungarian, right? And like I did here with the pound Canadian. It's not that I want to take on more risk, but price did not get above this area that was holding. So I did not want to just be shaken out at that time of night when, price could easily just be in a lower liquidity time and then drop down. Well, look what happened. Price ended up just nicking me out and dropped down. Well, luckily for me, I was watching things and I actually ended up re-entering here. So let me show you that one now. Okay, guys, so here's the last one. Again, here's that trade where I caught, literally picked the top on this one. I had almost no drawdown, literally no drawdown. And I traded this as a touch trade, but I posted this on the forum. I didn't really get to explain this one though as well of what I was looking at here, because this was sort of an interesting one. So what I shifted my viewpoint to was, again, I still think that gap's going to close. That to me is where the market wants to drive to. But look what we have here. We have this sort of wide range support, resistance, support, flip zone here, right? So to me, I'm like, okay, this resistance is still very good, right? Maybe that trend line isn't as impactful anymore. Okay, I mistimed it there. Happens, cut my loss, no big deal, right? So what I was looking at here is sort of this head and shoulders pattern, right? Here's our head and shoulders pattern. It's that big bearish outside bar that sort of kicked things off. And this is just a pull back to that head and shoulders pattern, right? So I was just touch trading this area. Now, the thing that I didn't get to explain in the forums is I was watching this area very closely. And yes, I was watching on a 5-minute. Yes, I do this. Not always. It's not every situation. It just depends on what I'm looking at. And then we had this pin bar breakaway move, right? What does price like to do? Likes to pull back to this area. And we also had an exhaustion bar where I've spoken about a price close at the very top or the very bottom of a bar. Those bars like to reverse. For example, here's one, right? Price close at the very top, price reverses. Price close at the very top, price reverses. But again, you want to be understanding your locations to do that. So what I do is I watch multiple live feeds when I look at that to confirm it really did close at the top. And I just also at the time we had this 30-minute. Let me just get rid of this so you guys can see. We had this 30-minute wick bar too, right? Look at this wick bar. So I've spoken about wick bars where price moves up, right? Moves down, moves up, closes underneath the previous bar. So we have this wick bar that can't close above this strong support area. Previous support turns to resistance. So all I did was sell that area. I started with my stop up here. I risked 1%. And it just very simply just targeted this gap close just shy of it. I just didn't want to be I didn't want to be too perfect here, so I gave a few pips up. But it ended up being a nice trade, ended up being a 1.6% gain. So again, lost a little bit on the other trade, got that back and more. Again, not a ton, but got that back and more, and finished up the week with that one there as the last close trade. So again, guys, this ran. I believe I got them all. If I missed one, I'll remember it probably after, but I don't think so. So again, this overall ended up giving me about almost a 5% week. And it's like I said, it's brought me to where at minimum I sort of like to be as an average where, again, I have realistic expectations. I try to always beat those, but I try to be smart and I try to understand my risk and my drawdown and those things that are so crucial to me. Again, it took a lot of patience these first 4 months. And I'm so glad in a way it happened that I can show you guys this. Of course, I would love it to be easy, but I'm really glad in a way that it happened like this because you guys get to sort of see what it really takes about being patient, about being picky, and making sure you're controlling your risk at all times. And then when the winners come, they'll come. And that's the whole goal, right? So again, hopefully this video was helpful, guys. As always, I'm here to help, answer questions, and if you guys have feedback too, of course, let me know. So we're going into a new month now, first 4 months behind us, and hopefully this has sort of shaken the markets up, and we'll see easier months to come now.